Good morning, traders. This is Brad Matheny. Today is December 18th, Sunday, early in the morning. This video is going to be focused primarily on gold and silver and precious metals, but it correlates to what I believe is going to happen over the next 3 to 5 years related to the U.S. and global markets. Now, I just created a video. It's about 20 minutes long, but it goes over quite a bit of detailed information and shows you what I believe is likely to happen over the next 5 years. And particularly this chart highlights what is likely to happen. Ignore this line here. Pay attention to this vertical line here, which is the beginning of the next crisis phase. This is a monthly chart going all the way back. You can see to the lows here, 2009. What I believe has happened is we've reached a critical low. We may not see this downward cycle low, which still could happen, but I don't believe it's going to happen. I believe that the next phase here is an apexing formation into the end of this year, a sideways slide with moderate volatility, possibly 5 to 7%, and then starting an upward move, what I'm calling a reflation trade, very similar to 2003, 4, 5, 6, pushing back up to new highs, possibly in 2025 or 26, then rotating back downward slightly, reestablishing another base, and then pushing into a speculative bubble peak, which would create an ABC structure, wave 5. Remember, I believe this is wave 1, 2, 3, 4, and then possible 5, indicating that we then move into a crisis cycle phase somewhere back over here, which could push us back down into the 2,000 or 3,000 area level. So what this means for traders is that we're moving into something very similar to 2003. So hypothetically, come back over here, spread this apart, and go to auto scale. And what we're looking at here is kind of a move like this. This is the ES back in 2000, the dot-com bubble burst, and then we had the 9/11 attacks over here. We had this deeper move. And what you're seeing really right here is from these highs, very kind of difficult to see, but the way I would count it is an A move here, a B move here. Let me recount that, do it again. I would count this as basically it looks more like an A, B, C, D, E, and I actually have to do that differently because C cannot be that big. So we're looking at an A, B, and then A, B, C, which would be our C wave, and then here, and then a D wave down to here. That is our 1, 2, 3, 4, 5 wave structure, followed by a reflation trade here. Now, where we're at right now is probably somewhere in this area. Consolidating, stalling, moving into kind of a sideways trend, attempting to reflate, and then moving into a reflation trade like this. Now, at the same point in time, gold and silver reflated very solidly during this time frame. And remember, back over here, we had a bit of a blip in gold and silver, pulling down a little bit, and then extending into a massive cycle phase, reaching a peak in 2011, right over here. So I need you to understand that where we're at, in my opinion, is right in this area. I believe we're looking at this next reflation trade that may last, again, this is 1, 2, 3, 4, maybe 5 years into the future, a massive reflation trade, and I believe it's going to push back up to all-time highs, maybe new all-time highs into 2025, 2026. I'll go back over here, try to show you what's going on over here. I believe we're going to be looking at this type of a reflation trade. This would be considered a wave 1, 2, 3, back up to here. And I believe we're going to be looking at possibly 5,900, 6,000 on the SPY here over the next 5 years. It's going to be a tremendous opportunity for traders who are prepared for it and who can take advantage of it. We are waiting out this consolidation, which takes place right now because we are in a transitional phase and I will highlight that to you. So this is our monthly data, and come back here to weekly, and you can see that we are on a weekly basis. We have reached our extreme lows. This was a very deep 50% correction to the downside from the COVID lows to the all-time highs up here. We reached in a perfect 50% correction right in this area, and now we are breaching this resistance channel here, and we are actually apexing. Kind of hard to see it, but we are apexing off of this low. Well, actually, I've drawn it with this yellow line. Off of this low, we've reached this apex right here. Now we've got the volatility near the apex. I believe this is a false washout correction to the downside in very light trading near the Christmas holidays, and we are going to resolve to the upside on a reflation trade. And where that comes into play, ladies and gentlemen, is right, where is it? I have to go get it. Right here. Where we are at with this is we are in an upward trend on the leading index, my custom leading index. We've broken this high, which again, on the leading index is very important to understand. These new highs being above this critical high is in divergence to the SPY, which is these current highs are not above this high. So we are now reflating on this leading index faster than we are seeing reflation in this in the SPY chart, and we have gone back into a low fear cycle. Now the fear cycles moved just above 7, which means we're into moderate fear right now. We had been in lower fear. I believe this could stay slightly elevated for 3 to 5 weeks and then move into a very moderate upward trend, kind of like we saw back over here with upward trending taking place. Very low fear, very moderate volatility, 2 to 4% per quarter, roughly, melting upward in potentially, I call it 2 to 6% roughly per quarter, and eventually extending higher as we get some real confirmation of the upward trend. Now, what this does for gold and silver is very, very important. Gold and silver, this is my custom metals trend index chart. You can see here from 2019, 20, this is a weekly chart, 21, 22, and 23. We have come way off of this bottom. We are reflating very strongly in metals. This shows you that accumulation in metals is taking place. We are likely to move up to new all-time highs. This would put metals up into 2100, gold particularly at 2100, 2200, and this is likely going to happen before May, June, July of 2023. I don't see any reason why we couldn't get this same type of reflation trade. So hypothetically, this is 8,700 to, let's call it 12,600. So that would be, do the math here real quick, that'd be about a 4,000 point move. And from here, roughly 9,750, that would put us up into 1,350 up in this area. And that would put us at 2,100 gold, 2,250 gold, somewhere in that area before we start to stall out. Now, we could see this continue to melt up for the next 4, 5, 6 years or longer before we get into the real blow-off speculative phase. And I believe that we are going to see gold continue. Let me find my gold custom index chart. This is my metals custom index chart. I believe we're going to see gold move back up into these highs right over here, back into what I call the yellow brick road, which is these channels, and then continue to form a base and then reflate even higher. So this means that in order to get back up above previous highs, we've got to get gold up into above this 480 level. And I believe that's going to be the next big move for metals as accumulation starts taking place and as the Fed starts to pivot. What I believe is going to happen with the Fed and the global central banks is they're going to pivot after they have perceived that they have put enough pressure to stall consumer speculation and inflation. What's going to happen is they are going to be forced to pivot to a moderate level. So you're going to see interest rates maybe continue to rise for another couple months, maybe into May, June, I would think. And then I think we're going to be forced to pivot. And I think that's going to come at a time when Global economies are under extreme pressure. Inflation is tanking. Commodities could be pushed down. And then we're looking at a very strong reflation trade as the Fed pivots. And I believe we're going to see global markets reflate at least 50-60% over the next 4 to 5 years. And I think the U.S. markets could reflate at least the same 50-60% over the next 4 to 5 years if my analysis continues to play out. Now remember, I will keep updating every week, keep you updated every week at MENT.com as far as what's going on. But understand that the real long-term cycle here for gold and silver and platinum is the 2027, 28, 29, 30 peaking level. So this is 6-7 years out. We could see a massive inflation cycle, and that really comes down to this chart. This is a monthly cycle, and what we're looking at here with the gold cycle is we're seeing accumulation. That's what this basing bottoming is here, is accumulation of metals. Basing, bottoming, and accumulation. Accumulation starts to build in this area, like we saw here, and then starts to move to the upside. And this is where we start to see real price advancement starting to take hold. This is where metals will really start to move. Then we get into our explosive speculative peaking formation. Then we see our blow-off formation. Now, metals can still move higher during this peaking formation and this deflationary or distribution cycle, but eventually metals stall out, base, form a peak, let's call it, and then start to consolidate downward. And that's what happened during this time frame here. We were deflating during this time frame, moving back down to the base cycle. And you can see this happens repetitively. It inflates, reaches a peak, deflates, forms a bottom, inflates, starts to base, starts to accumulate, reflates, we get a price peak. Peak could last a little bit beyond this, and then deflates and depreciates. And this is distribution across metals. And then bases, bottoms, starts to accumulate, starts to reflate. Then we get our speculative peak. Then we go a little bit beyond that, and it starts to shift into deflation and distribution. We are now in the new cycle phase, which I believe is going to move us into a reflation cycle. And I believe it's going to last all the way out into 2025, 6, 7, 8. And then begin a speculative, potentially in that time frame, 27, 28, 29, begin a speculative bubble in metals, which could put gold well above 7,500. I mean, you've heard it. People have talked about it. But, you know, a lot of people blow it off like, yeah, it'll never happen. I really do believe that it could happen. I really do believe that the appreciation cycle where we're at with gold right now, moving higher. In fact, let's go back to this trend. And so hypothetically from 2018 up to the 2020-21 peak, before the deflation took place, which is in late 2020 into 2021 here, if we come back over here and look at the trend index from 2018, we're looking at a move roughly, this is again my metals trend index, which is tracking the actual trend of metals through accumulation and distribution. We're seeing a move from basically 6,500 to the deflationary trend back over here. We had a peak at around 1,800, 11,800. So this is almost 100% move in metals, theoretically on this metals trend index. If we were to go from this deflationary level, 90, call it 8,700, that would move metals up here to around 17,000 if we saw another 100% move throughout this cycle, possibly a little bit higher. 17,000 by my estimation would put us in a roughly a 3,200 to 3,500, maybe a little higher in metals. But remember, this is over a 2018 to 21. This is really 2.5 year cycle. So we're talking about a 5-year cycle to 7-year cycle where gold could reach, the next move could be up to 3,700, maybe 4,000, then a consolidation, then another move higher, potentially moving it up to 7,500, 8,000, then a consolidation, then a speculative bubble peak, which could put gold well above 13,000, 14,000, maybe even up into 18,000 area. But understand that is under the presumption that we move into this cycle and that my cycle research is accurate. So a lot of things can change over the next, call it 10 years. But if my cycle research is accurate and my analysis is accurate of the markets, we are going to move into a reflationary trade. We are going to be looking for a peak in the U.S. stock market around 2027, 2028. So kind of in this area over here. And that is when we will see the big blow-off move in precious metals, gold, silver, and platinum. So you have lots of time to accumulate and lots of opportunity to move forward. But I want to put this out into the internet because I want this to be a marker. 5, 6, 7 years from now, we'll see how I did on this. We'll see if my cycle research predicts accurately what actually took place. And it's important for me to have this kind of validation in the sense that I want to know what you think. I want to see how this plays out. I want to see if my predictions come true. Because in the reality, ladies and gentlemen, that's what we're looking for. Is someone with the knowledge and the experience to be able to identify and see into the future what we're likely to be trying to fight against. And that is what's going to provide us the opportunity to make smart decisions going forward. So again, metals are getting ready for an explosive move. And I can't tell you how big, because like I told you, I just went through the examples. I mean, it's hard to imagine $13,000, $14,000, $15,000 gold, but it could happen. It's hard to imagine $250, $300 silver, but it could happen. And we may only be about 5 or 6 years away from seeing that happen right now. So imagine silver at 22, 23. What a smoking deal if it's going to go to 150 or 250. Gold at 2,000 or 1860. What a smoking deal if it's going to go to 15, 16,000 by 2027, 2028. So be prepared. This could happen, and the phase that's going to take place is that global central banks will move into a easing, let's call it complacent type of a format, having beaten inflation. Inflation will stagnate, commodities will stall, demand will stall. This will cause stocks to reflate because as interest rates drop and all this money out in the world is going to be looking for safe haven and opportunity. Where are they going to get the opportunity? Well, opportunity, again, bonds may give you 5, 6, 7% fairly safely over the next 7 to 10 or 15 years, whereas the stock market reflating back to all-time highs over the next 3 to 5 years could give you 40, 50, 60, 70, 80% return on investment. So think about it in terms of where would you want to put your money? Would you want to put your money into something for 10 years and get 5% or 6%? Or would you want to put your money into something for 5 to 7 years and get potentially 40 to 70% or more return on investment? And that's where this reflation trade begins to build momentum. Very likely near the end of 2023, it'll start to really build momentum, push higher, and then move into a very big ABC move up into 2027, 2028. So be aware, guys. Follow me at MENT.com. If you like what I'm doing and you believe that I could be correct, then go to MENT.com, create your account. It's free. Learn how I can help you. Learn how my algos can help you, and learn how we can trade this effectively on a slower swing trading basis. Remember, I don't do the 5-minute. Well, I mean, I do it, but I don't have services offering you intraday swing trade type analysis. My goal is to give you these broad macro pictures as to what's actually happening, and let you find the tools to navigate your swing trades effectively, daily, weekly swing trades, which are many weeks or months in advance, And what we want to do is just basically steadily grow our wealth while protecting our capital. If you want to be a day trader and trade, every minute of every day for the rest of your life, have at it. But I'm not really going to be involved in trying to provide you services for that, simply because I don't want to spend 24/7 trying to help you day trade 5 or 6 or 7 different markets. It's doable, but it's a different lifestyle. And I want to enjoy my life and go golfing and have some fun and let my money work for me instead of work for my money. Okay, guys, we'll talk to you soon. Hopefully this helps. And remember, this is going to be an anchor post, really something that shows you what's going on over the next 5 to 7 years. It'll really be interesting if I'm 100% accurate, because this means that probably 70 or 80% of the traders right now that are loading up on puts and short positions are going to potentially get burned over the next 6 or 7 months. All right, guys, talk to you later. Bye.